All right, this is a follow-up video to my video about life insurance and using it as a mechanism to create an inheritance for yourself. I felt that I needed to be a little more specific about the types of life insurance there are, as well as also be transparent about the life insurance that my wife and I have. So there's basically three types of life insurance. There's, maybe you could say four, but there's whole life, which is premium that you pay monthly up until a certain age of the individual, and when that individual passes away, or once the life insurance policy is considered paid up, you get a check for that dollar amount that you signed up for. It typically does incur and or accrue or build up cash value, which you can use the cash value, you can use that cash, but you have to pay it back, and or at the time of the individual's passing, the death benefit will be subtracted typically by that amount of money that you've borrowed against with the cash value if you haven't paid it back. So you can have access to the cash value, but it does lower the death benefit if that cash value is not paid up or paid back when the individual passes or when you pass. So that's whole life. There's universal life, where typically the policy, you pay into it for a time, and then the cash value that you've accumulated actually makes the premium payments for you. There's two types of universal life. There's the regular universal life that I just said. There's also increasing death benefit, where as you continue to fund it over the years, when that individual passes, not only do you have the death benefit that you initially signed up for. So let's say you took a $1 million life insurance policy out on your mom, but it was a universal increasing death benefit, which I believe is an option B. You keep funding it, you keep paying into it as the policy accumulates over the years. When she passes, if that policy somehow accumulated an extra $200,000 in cash value at the time of her passing, you would not only get the $1 million death benefit that you signed up for and paying for the premium, paying the premium for the policy, you would also get the cash value tax-free. Again, there's universal option A, option B. You need to look into that more yourself. And then there's what my wife and I have, which is currently just term insurance. Dave Ramsey's a big believer in term insurance, so am I. However, term life insurance is not really a life insurance that is suited for what I'm talking about using life insurance for, because you basically have life insurance for X amount of years, and you're betting that you won't die, but if you do die within that time, you're going to have a fairly large payout. Term insurance is vastly cheaper, much less expensive than whole life and or universal life. It's a lot cheaper. It doesn't work though for what I was talking about, which is using life insurance as a mechanism to create an inheritance. It just doesn't work well for it. It's really more of a tool to protect your family and the ones you love in the event of an untimely death or disease, etc., etc. And the reason that is because it's so inexpensive to have the policy typically. Years ago, when I first got into insurance, I was an insurance agent for a while. It didn't work out for me. But when I started, I tried to take out $1 million policy on myself. At the time, I think I was 26. And that $1 million policy on myself would have been right around $500 a month, whereas a term policy was only about, I think, maybe right around $100 a month. So for the same death benefit, same, health conditions, etc., etc. The point is this. There's a lot of great options there for life insurance that you need to look into. And although they all will create an inheritance-like situation, the variations in life insurance concepts do matter. And I would strongly encourage you, if you are someone who wants to look into creating an inheritance for yourself or for your children, the term policy is not a good idea. Term life insurance is a great idea for protection in the event of a worst case scenario, an untimely death, a wreck, you or your spouse develop cancer, or contract some terrible disease, or there's a genetic anomaly, I've said that wrong, a genetic anomaly, within you that causes you to have degenerative tissue or whatever the case may be that will unfortunately send you to the grave much quicker than normal, a term life insurance policy is a great policy to protect financially against that untimely death. But for the purpose of creating an inheritance and thus adding to your wealth later in life, whole life and universal life are great options. Universal life is a little different. You may have to overfund it at times, depending on the company and the contract. You may have to set more dollars aside for a universal policy than you would a whole life policy. But nonetheless, there's still good options. I would encourage you to look into it for yourself, if not only for the purpose of creating an inheritance for yourself by taking out a policy on your mom and dad, but just look into a life insurance policy for yourself just for the bare minimum of protecting your family. So when you think about that, so this is something important concerning term insurance. Excuse me. You need to have enough money in your life insurance policy, in your term life insurance policy, to absolve the mortgage in one payment, pay that off, and any other debt that your spouse may incur and or have with you when at the time of your death. So right now, for my wife and I, the only debt we have is our house. That's going to change. At some point, I'm going to invest in a rental property or start a food truck. Mom's B's and G's could be a big deal. But whatever debt you have, there X amount of dollars of that death benefit that your spouse would incur. In this case, if I die early, X amount of dollars of that death benefit will go automatically to paying off all debt. After that, you're going to want enough money to be able to be put back for the benefit of your children should they want to go to college when the time comes. Because again, my wife and I, even though she makes more money than me, 33% of all women now do make more money than their male spouse, as well as I think another 40% roughly make about the same amount as their husband and or slightly less. But even though my wife makes more money than me, my income is still important, and it actually contributes a lot to us paying off our debt and building wealth. So I need, which I do at the time of my death, to not only leave her enough money via life insurance to pay off the mortgage and any other debt that we have, as well as fund college for our children should they want to go when the time comes. She can have money set aside for their college, whether it's a 4-year university or 2, whatever the case may be, when that time comes. But I also have to be able to have enough money set aside to mirror the wealth building aspect of my income. So not only, absolving all the debt, taking care of the costs that are going to be coming, like my burial, et cetera, when the time comes, but also to future college investments, whatever the case may be. And by investment, I mean our kids want to go to college, so we got to pay for that, having that money set aside, but also too, leaving my wife enough money to where after all of the debt is absolved, after all of the costs that she's going to incur through burying me, et cetera, or cremating me, whatever the case may be, the service, yada, 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 as well as taking care of college, she needs to have enough money left to her tax-free that can allow her to build wealth for herself. So let's say she has $500,000 after paying off the mortgage, getting college set up for the kids, paying off all of our debt, paying for the services, the funeral arrangements, whatever the case may be. After all that, she has $500,000 available to her. She can pop that into an annuity, or she can pop that into an indexed annuity or a fixed rate annuity. There are annuities out there that are offering 3.5%. And just let it sit there over time so that when she retires, that money will be available to her as well, acting similar to like a 401k, although much less aggressive and much less accumulating wealth at a much lower rate. Annuities aren't great at building wealth, in my opinion. But what annuities are great at doing is creating lifelong income. She could take that $500,000 and put it into an income annuity payment option starting at 55, where whatever $500,000 at her age now, starting at 55 until she's 85 or for the rest of her life, whatever dollar amount that purchases for her monthly, she could do that. And again, that would be a way in which she could have extra money after paying off the debt, funding college for our kids, burying me, paying for the services, etc., etc. There would be X amount of dollars left over that would mimic my wealth building ability with my income for her as if I'm alive. Again, there's a lot that goes into it. Term life insurance is the best for that, to act as a safety net. Whole life insurance is the best for creating an inheritance for your kids over time. But I wanted to talk about that. It's important. Should you get life insurance for yourself, I would encourage you focus on term life and make sure the death benefit is high enough to pay off the house, to fund college, to pay off the debt, to bury you, and also for there to be money left over so that after all those expenses, all those costs are absolved, your spouse, your widow, can have an X amount of dollars, for you that can mimic you being alive and working and allow him or her to build wealth for themselves after you're gone. The powerful thing about life insurance, whether it's term, whole life, universal, whatever, the powerful thing about it is that it's really the last expression of your love for that person, for that spouse, and for your children, even in death. It's the last, crossing the finish line, whether it's an untimely death or it's a life that's well-lived and that was long-lived, whatever the case may be, it's you loving that person in death, loving them so much that unless they make terrible choices or another disastrous situation befalls them, they're never going to have any financial problems ever again. They're never going to have any financial concerns ever again. That is a true and powerful step and statement of love, you setting that up for that person even in your death. Obviously you did it while you were alive, but the death triggers it, and from there on, they are taken care of and they are provided for. It's a powerful notion, and any men that are listening to this, men die first, typically. We work more dangerous jobs. My wife has a wonderful job. She never has to climb a ladder. She never has to pressure wash. She never has to fill up a trailer and take it to the dump. That's not her reality. That's my reality. My job is much more physical. It's much more demanding. It's much more dangerous. Men die first. We have a lower life expectancy than they do. For the men that are listening to this, and if any of you are listening or watching it, I strongly encourage you, get a fat life insurance policy on yourself. Term is great. Whole life is great too. Term is better for what I'm talking about, in that in the event that you are taken from this world prematurely, you can leave your woman, you can leave your spouse a pile of money that will make their life infinitely better, at least financially. Obviously, they won't have you. That's a crushing blow, but they won't have any financial concerns, and your kids will not be plunged into poverty. I'd encourage you, men, it's a great way to love your spouse even in your death, and really take a position of strength and power and control as a man, and really being the leader in the home and being willing to sacrifice even in the midst of death. So it's a powerful tool, but I wanted to make sure that I talked about the differences in life insurance, because it would be a mistake of you to go out and get a term life policy on your parent expecting that to pay out, because the term life insurance is actually predicated upon the fact that most likely you're not going to die, which is why it's profitable for the life insurance company to sell that life insurance product to you at such a lower rate premium wise, because most likely you're not going to die. But in the event that you do, the policy pays out, your family's taken care of financially. Wanted to break that down. There's universal life, option A and option B. Option B is the increasing death benefit, where at the end of the person's life, you not only get the death benefit that you signed up for, you also get the cash accumulation. Then there's just regular whole life, which in my experience tends to be the most expensive, but it's cut and dry, simple. You pay this premium. Once the policy's paid up, you get a check if the individual lives past the life insurance payout time, and or if the person dies, or rather when the person dies, you get the check, no problem. I wanted to go over those different options. It's important that we know what we are getting into and or thinking about doing. But yeah, I just wanted to make sure that I got that out there and give it a little more of a breakdown. If you have any questions, you can email me. It's in the link of my channel. I was a licensed insurance agent. I no longer am. I don't sell it. To my knowledge, nothing has changed. There's different variations in the products. Farm Bureau has a great product that's a return of premium. There's other companies that have that product as well, but basically you pay, I believe it's a term life insurance product, but you pay into it over the years, 20, 30 years, whatever. At the end of the policy, if you haven't died, they actually return that premium to you. So there's variations on it, but there's really just 3 main policies: term, universal, and whole life for the most part. There's simple issue, there's lower value, there are catastrophic life insurance policies where for like $2 or $3 a month, you can have a life insurance policy, but it only pays out if you die in an airplane accident or something ridiculous. So I didn't touch on those because for the vast majority of people, they don't really matter because it's just not going to happen. But for the most part, what's sold is whole life, term, and universal. Within universal, there's 2 options. At least there was at the time that I was licensed. I believe it's still the same. There's the option A, where it's the flat rate and it's the flat death benefit. Then there's the option B, where which is called an increasing death benefit, where you get the cash value paid out to you tax-free on top of the death benefit that you initially signed up for contractually. Wanted to get that out to you guys. It's important. Go do the research for yourself. Go get life insurance on yourself. It is vital. It is vital. Do it. It's powerful. It's loving your spouse, your kids, your brothers, your sisters, your mom, your dad, whatever the case may be. It's loving them in death. It's a powerful tool to take control financially for future generations. Let's go.